Hello dear students, today we will see when goodwill is created and written off. Created we have seen, written off, how to do this transaction. So one thing you remember, when goodwill is created, what is the meaning of created? Suppose we are running a partnership firm. We have calculated that the goodwill of the organization can be around 10 lakh. We have decided. So let us create it. So when we create goodwill account data to old partners account, that created 10 lakh goodwill is going to share by the old partners as per the decided sharing ratio. Created, okay. Next, written off. When we have to written off this goodwill, what to do? For written off, old journal entry, goodwill data to old partners account. Now that you have to reverse it by including new partner. It means written off entry will be all the partners account data to goodwill. If you don't take new partner, it will be same as it is reverse of the old entry. Old entry is here, goodwill data to old partners as per the given ratio. This is for creating goodwill. For written off goodwill, this you are reversing. Written off means we are writing off. So this we are reversing by adding new partner also. Then it comes new partners account data to goodwill account. That's all. This you have to remember about the goodwill created and written off. And this new partners data to goodwill, it will be in the new ratio. New ratio will be given in the problem. Are you getting it? So we'll see a problem. So where is the duster? Right. So you can see the problem on the desktop. In this problem, Ram and Shyam are partners sharing profits and losses in the ratio of 2:3. Their balance sheet as on 31st March 2020 was given below. So balance sheet, if you see, asset side, bank, bills receivable, debtors, furniture, machinery, building, everything is clear. We'll be taking as it is into the balance sheet. And liability side, bills payable, trade creditors, 12% bank loan, general reserve, capital. Capital will be writing into the capitals account. General reserve will be distributing to the old partners as per the old ratio. And other liabilities will be as it is in the balance sheet. Is it clear? Now coming to the adjustments. On 1st April 2020, they admitted Mr. Madhav for 1/4 share in profits on the following conditions. What is the condition? First one, Madhav should bring 20,000 towards capital in cash. So cash account data to Madhav's capital account. Second one, goodwill of the firm is valued 30,000 and it has to be decided to create and write it off completely. As I told you, we'll create how much? 30,000. We'll write off. Creating Ram's goodwill account data to Ram's account, Shyam's account. For writing off Ram's account data to Shyam's account data, Madhav's account data to goodwill account as per the new ratio. Now second point is over. Now third point is depreciate furniture by 5%, machinery by 10%. Both will come from the revaluation account, debit side. Appreciate the value of building, 20%. This is also revaluation account, credit side, because appreciation. Next, new profit sharing ratio of Ram, Shyam and Madhav would be 1:2:1 respectively. New profit ratio. Why it is given? To write off the goodwill. This we are going to use to write off the goodwill. Okay. So, and give the journal entries and necessary ledger accounts and balance sheet of the new firm. First we will write the journal entries. Journal entries generally will take from the adjustments only. First adjustment is Madhav should bring 20,000 towards capital in cash. When he has to bring the capital into cash, First journal entry will be cash account debtor to Madhav's account. Madhav's capital account. So how much is getting? 20,000. Being capital brought by Madhav into business. Second one, goodwill of the firm 30,000 has to be decided to create. To create the goodwill, what is the entry? Goodwill account attached to old partners. Who are the old partners? One is Ram and one is Shyam. Ram's account to Shyam's account. Goodwill is 20,000. So this is in the ratio of 2:3. 2:3 means how much it comes? So 12,000 and 18,000. Being goodwill created. Being goodwill created. Next, the same B bit, it's decided to create and write off it completely. When we wanted to write off goodwill, all the partners account attached to goodwill account. Ram's account, debtor, Shyam's account, debtor. So the new partner Madhav. Madhav's account debtor. To goodwill account. Goodwill is 20,000. We have to distribute it in the ratio of 1:2:1. 20,000. 1:2:1 means 1/4. 1/4 is 5,000. 1:2:1 means it is 5,000, 10,000, 5,000. Okay. So this we have done. Next, after this we'll go for general reserve. General reserve, it is to be distributed to the old partners. Fourth one, general reserves account debtor to Ram and Shyam. Ram's account and Shyam's account. General reserve is here 20,000. Goodwill also same 20,000. If you calculate it, you will be getting 12 and 8,000 only. 12,000 and 8,000. Being general reserve transferred to old partners. Next, depreciate. C bit. Depreciate furniture by 5%, machinery by 5%. Both are revaluation account debit side. So entry will be revaluation account debtor, revaluation account debtor to machinery account, furniture account, to furniture to machinery account. Furniture 5%. Furniture value is 20,000. 20,000 5% means 1,000. Next, machinery 10%. Machinery value is 40,000. 40,000 10% is 4,000. Being depreciation on furniture and machinery transferred to revaluation account. Next, appreciation of building. Appreciation of building, reverse of this. Building account attached to revaluation account. How much is the appreciation value? 20% on the building. Building value is 30,000. 30,000 10% is 3,000. 20% means 6,000. Being appreciation of the building transferred to the revaluation account. That's all. Next, what we'll do first, revaluation account will prepare. I'll prepare here only, we have enough space. Revaluation account, debit side items we have 2 furniture, 1000, 2 machinery, 4000, buy building 6000, 6000, 5000. It means you are getting 1000 loss. 1000 will be transferred to the Ram and Shyam. In which ratio? Ram and Shyam were sharing the profits and losses in the ratio of 2:3. 2:3 means it comes to 600, first one 600 and 400. Now we'll open the accounts. Capital accounts. Debit, credit. Here also debit and credit. Now capital account will start with the opening capital. Opening capital of the partners is here. Ram is 20,000. By balance brought down. Ram 20,000. Shyam 30,000. Ram, Shyam, Madhav. Madhav brought 20,000 as cash. So, by cash 20,000 Madhav. Apart from this, we can take everything from the journal entries or revaluation account. Where we'll get goodwill, created goodwill. So, by goodwill. When created goodwill, Ram and Shyam shared in the ratio of 12,000 and 8,000. Next, goodwill is written off. Written off means all the partners comes. So, it's on the debit side. $5,000, 10,000 and 5,000. After the general reserve, $12,000 and 18,000. And let me to have a glass of water first. While teaching, it's quite common throat problem. So general reserve is over. Next, what else? Profit by revaluation account 600 and 400. How much we get? We'll calculate. It's 20,000. Balance carried down. 5,000 means it is 15,000. And Shyam is 30. 400. This is 16. 4, 5, 6. 66, 400. means 56,400. Next this one is here, it is 600 and 4, 44,600. 44,600 minus 5,000, 39,600. Next, after that we can open even the goodwill account also. Goodwill account. First of all, for creating goodwill account attached to Ram and Shyam. So to Ram and Shyam, 12,000 and 18,000. After that, goodwill is written off. Written off means it's on the credit side, this entry. First entry, second entry. Second entry is here, by Ram, Shyam and Madhav. It is 5,000, 10,000 and 5,000. It's tally. This will not appear in the balance sheet because goodwill created, written off. No more goodwill in the balance sheet. Now let's prepare the balance sheet. Journal entry, 6 entries we have written. So 7th entry it can be this. 7th entry is this. Revaluation account attire to Ram to Shyam. So revaluation account attire 1,000, to Ram 600, to Shyam 400. 7th entry. Now coming to balance sheet. Oh, we forgot to open even this cash account. So cash account, I think you have noted. I'll prepare here only cash account, or otherwise we'll do this. Remember, always you need to open the cash account, because what is the cash to be written in the balance sheet, that you must know for that cash account. To balance brought down. How much is the cash given already? It is 15,000. Cash or bank, both we are assuming it same. Next, Madhav's capital. Here is the cash to Madhav. Anywhere cash, that's all. So it means cash is 35,000 by balance carried down. So now the same cash we are going to write it in the balance sheet. Asset side, assets amount in rupees, and liabilities. So cash is here 35,000. Then after that we'll see, first we'll take the capitals also. So Ram, you can write capitals. Ram, Shyam, Madhav. Whatever we got it, we are transferring 39,600, 56,400, 15,000. After this, we'll see the balance sheet. Bills receivable 25,000. Debtors 40,000. Next, furniture. Furniture, there is a depreciation, I think, where it is? Yeah, 1,000. Furniture 20,000 minus 1,000 depreciation. So it comes 19,000 outer column. Then machinery also there is depreciation. So machinery value is here 40,000 minus Depreciation 4,000. It is 36,000. Next, buildings. There is an appreciation for buildings. Buildings is 30,000 plus, how much is the appreciation? 6,000 plus 6,000. So it is 36,000. Asset side is over. Now next, liability side, bills payable. Capitals already we have written. Bills payable 20,000. Total creditors 30,000. Next, 12% bank loan. Bank loan 50,000. That's it. So we'll see the total. 35,000, 25,000. It is 60,000. 60,000 plus 40,000, 1 lakh. 1 lakh 19,000. 1 lakh 19,000 plus 36, 36. It is 1 lakh 91,000. And this side also 50, 1 lakh 15,000. 56, 400. 39, 600. Somewhere something is gone wrong. We'll see. We'll check up everything properly. Here only it's gone. 12,000, 12,000, 20,000, 12,000, 12,000. General reserve is here. General reserve, if we just open it, 8,000 and 12,000. 8,000 and 12,000, sorry, here. Yes, 8,000, 12,000. There we made a mistake. So general reserve is here, 8,000 and 12,000. And so the total will be changing. So it is 40,400. And this is 60,600. And from this, if we deduct it, we'll be getting around 32,900 and 45,600. 32,900. 45,600. So this is 30,000, 18,000, 12,000 and 600. This is also changing, 600 and 400. 400 and 600. Actually 2:3. I have taken it as a 3:2. Small mistake, so everything has changed. Anyway, nothing to worry. So altogether we are getting 60,600. This is okay. 60,600 minus 7,500. Goodwill is created 12,000 and 8,000. Okay, return of goodwill. This is also we have taken in a wrong way. 20,000 goodwill. Goodwill is 30,000. It is to be distributed in the ratio of 1:2:1. 1:2:1. If we take 7,500 and here also 7,500 and 15,000. Calculations, small mistake, it happened. So this is in the ratio of 1:2:1 and this is 3:2, 2:3. General reserve was also 2:3. So altogether we'll be getting 45,600, 15,000 and not 15,000, this is also 12,500. Please write the journal entries of goodwill also. Goodwill created, goodwill, that entry was clear. Second entry, third entry amount. So this you make it a change, goodwill. Okay, it's over. Now the same thing we have to write 32,900, 45,600. Only these changes, rest of the things are over. So I will be getting 1,91,000. Let me tell you very clearly. So in this problem, nothing to worry. What I made a small mistake is that goodwill and general reserve calculations and revaluation, this is also, I have taken it as a 2:3. In fact, it is 3:2. That's it. Even 1:2:1 goodwill, return of goodwill also, that calculation is to be very careful. That's it. The problem is clear, everything. So here what we have learned is here goodwill created and written off. When goodwill is created, goodwill account attached to old partners account. Written off, all the partners account attached to goodwill account. Which ratio? End of the problem, that ratio is given 1:2:1. In the same ratio we have to distribute it over. Journal entries first we have written, then after that created revaluation account, and a revaluation account you got profit of this much 400 and 600, transferred to 400 and 600. General reserve, from the balance sheet we have taken this one, and goodwill is created is this one, and written off this one. Opening balances of Ram, Shyam and Madhav, that's all. We got balance carried on. So this we have written here 32,900, 45,600 and 15,000. Goodwill account also we have created. So created goodwill and written off goodwill over. So this will not appear in the balance sheet, that's all. And balance sheet we have opened, and cash account also we have opened. We have only one transaction apart from the opening cash. Opening cash is this much, and Madhav got the cash. So this is second entry. So both together 35,000. 35,000 we have written here, and rest of the things like it is given in the balance sheet: bills receivable, debtors, furniture with the depreciation, machinery also with the depreciation, buildings with appreciation, and the capitals we have already transferred, and bills payable, creditors, bank loan. This is already given in the balance sheet. That's all, simple problem. So here nothing to worry. Calculation of ratios. Which ratio? If this is gone, problem is gone. So generally we won't do such kind of blunders. I made a small mistake. Okay. So in the coming classes we'll see some more problems related to the admission of partner. I want you to be thorough. There is nothing new. Only the thing is, if you know how to calculate the goodwill and what they are saying, what is the treatment, you can understand. There are many subjects already I have prepared. Check it out in the description box or playlist. You can get it and use it as per your syllabus. Stay connected with me and also share these videos with many students, maybe your juniors, seniors or your peers. Okay, You know that sharing is caring. Stay connected, study well, get good marks. Good luck.